Hey guys, welcome to a really special podcast with our returning guest, my dad, Mr. Dipan Mehta. We're here because our channel has reached a great milestone. We've hit 10,000 subscribers. So, for a second, I want to take a second to thank you guys, our viewers, for helping us reach this milestone. And really, we've reached this milestone in large part because of the Paisamaker series that we've been running. And so that's what we're here to talk about. We're here to talk about all the Paisamaker stocks, what's worked, what hasn't worked, how we find the stocks, and what we can expect moving forward. So without much ado, let's get straight into it. So the main question that we often get on our channel is how we find Paisamaker stocks. What do you look for, and how do you select that this is going to be our Paisamaker stock?
First of all, Varun, thank you for introducing me to this channel. And, we have this Paisamaker stock, which I'm really passionate about. And I take a lot of care in trying to present the right types of stock to our viewers as well. The underlying philosophy is growth at a fair price. So if you find a stock which is available at a fair valuation and it's got good long-term growth dynamics, then that's our criteria. That's what is going to be a Paisamaker stock. And also we've tried to present concept stocks, businesses which are not generally available or not so ordinary businesses. That has been the underlying fundamental concept.
So how do you screen? I mean, there's a couple of thousand stocks in the investable universe. How do you screen that and find that this is going to be the stock that I talk about? Can you talk us through your idea finding or stock selection process in a little bit more detail?
Minimum growth of 15 to 17% is what we expect, top line, bottom line. Reasonable valuation means price to earnings multiple around that 25 to 40 times trailing 12 month. I don't think I've recommended any stock which is going at a crazy valuation multiple. And something should be there in that company which is different, which I think that's going to be the driving factor for the earnings, which is to an extent not discounted in the stock price. And these are the things which I really look for. And then I try and present those stocks in a simple manner so that the viewer can understand the business, that business resonates with them. It's something that they can touch and feel and connect with. And hopefully then, they can study the company and look at investing in it.
So what kind of, because, growth, reasonable valuations, concept businesses, there's a lot of those out there. Well, not that many, but there's certainly a few of those out there. I'm sure there's several that you filter out for whatever reasons. So how do you filter out stocks that maybe meet those criteria? Are there any red flags, any problems, or what? Okay, now that you've identified these three criteria, is there anything else you do to select a stock?
It's a very interesting question because we use a very strong filtration process. So we avoid stocks which have got poor corporate governance standards. We avoid stocks which have got too much debt. We avoid Me Too businesses. I don't think I recommend any cement companies or any steel companies because there are many such listings and they're not unique businesses. So that's the filtration process we use. And of course, the last one is the valuation or the trading multiple. And make sure that the stock is reasonably valued. And this, mind you, is easier said than done because in a market like this, where we are focusing on small mid-cap stocks, to find businesses trading at reasonable valuations is definitely a huge challenge.
No, absolutely. And I think that leads it to my next question, because we consistently get questions on the channel. I think almost every Paisamaker we've posted, we've got a question on the valuations, right? Maybe the questions comes 2-3 months down the line when the price is different and the valuations are different. So for a novice investor, and really we're talking to a lot of novice investors here, what is valuation? How do you measure valuation? How do you know that the stock is, got a reasonable valuation? Because let's try to answer these questions, and I'll ask some more complex questions around it.
So I think that there's no simple answer to that question. And typically, we want to buy stocks which are trading at a price earnings growth. And I'll just explain that concept in a minute, at around 2 or 3 times or so, which means that if the company is growing at 15%, then we don't want to pay a price to earnings multiple of more than 30 times for it as a thumb rule. But then something special may be there in the company. It may be a concept stock and it may have a very strong competitive moat, then we pay a higher price.
Why 30? Why that magic number of 30?
I'm saying that if the growth is 15, then it is 30. The growth of the company is 25, then we don't mind paying it 50 times. So price.
Why does 15 mean 30? Why does 25% mean 50? What's the logic?
That's what's worked in the past. So whenever I've been investing in the market for 20 years or so, more than that also. And whenever I've found that I'm buying a company which is at or around price to earnings multiple is in the ballpark figure of its growth, underlying growth for the next 3, 4 years, which I see, it's worked out very well. And most importantly, when I'm forecasting growth and I'm looking at growth, I look at it in a very conservative manner. I don't look in a very optimistic manner. I just assume that, despite the constraints and the challenges, this business can still grow at an X%. It's available at Y. And so long as Y is not more than 2 times X, I'm fine.
Okay. So I have a adjacent question to this. And so what often happens now is you have managements that give really positive, really rosy commentary that, oh, we put up a new plant and it's going to triple our sales and it's going to double our profit. And managements tend to say this thing. Sometimes it works out, other times it doesn't. And within that commentary, investors often miscalculate the growth trajectory of a company. So can you really drill down a little bit into how you take time to understand the company's growth trajectory, what red flags you look at or not look at? Because understanding how fast a company is growing is not as simple as just looking at the revenue figures.
You're right, absolutely. And track record plays an important role over there. Also, we compare how the competing businesses are doing. And most importantly, I think we look at how the GDP and the various industry growths are taking place and then see how that company in that particular industry, its position in industry, how we can expect it to grow as well. So it's a fair assumption that this business has the potential to grow by this percentage or so. And then we keep on tracking it whether actually what we are expecting it to grow is that actually fructifying or not. And frankly, Varun, we bring a lot of experience in managing investments, in identifying stocks and identifying multibaggers. We are bringing all that experience to our subscribers, in a simple 5 or 7 minute video on that particular stock. And that really is the contribution, which is most important, that years and years of understanding businesses is what we are using to project a good Paisamaker stock.
So I want to move on to a different question, because this is another common question around valuations, is balance sheet items, right? Because, okay, there's a company is growing or not growing, or it's growing at some rate and it's available at some valuation. But oftentimes investors get confused with like large balance sheet items, like own a large land bank, or they have a really big asset, or, there's some big tax write-off, or there's some big liability. Like the valuation picture often gets clouded by balance sheet items. So how do you take a view on that? Do you just calculate it out, or how do you approach those situations?
Well, I think those are checkpoints which we do internally before we present a stock. And we, of course, study the balance sheet. And if there is anything which is slightly doubtful, then those stocks are completely avoided. But from point of view of the balance sheet, more important than that is the return ratios. Means what are the return on capital employed? And every Paisamaker video we focused on return on capital employed, return on investment, and that's got a strong correlation with the balance sheet. So I think that we run a checklist quickly as to the no items on the balance sheet we don't understand. But more importantly, what the return ratios are, which is dependent on the size of the balance sheet. So that's how we look at stocks.
All right. So I want to try and drill down into, individual stocks for a second. So we did a very rapid analysis. And I mean, this is not by any means exhaustive or perfect, but we looked at when we recommended the stock and how it's moved since. We took a broad average, and, the stocks have done 15-17% from recommendation till date. Now, of course, this is very imperfect because we just recommended a stock last week or last month. And like you said, we're here for the long-term investment. So it's not a great measure of performance. But nonetheless, I want to look at the performance of at least your major underperformers and major outperformers.
Sure.
And I want to start with Ujjivan Finance, because I think that's been an underperformer out of the Paisamaker. So what's been going on with Ujjivan?
So actually, Ujjivan Finance came with a kind of a warning that because of the election season and because of so many governments promising to waive microfinance loans, they're having problems in their collection, and also they have reduced their target as well. So that's impacted the sentiment in the stock. These things happen. I've seen them play out in microfinance companies. And I've been an avid investor of microfinance companies, and they go through these phases, but they come out very strong. And I've not yet thrown in the towel as far as Ujjivan Finance is concerned. Investors need to brace themselves for maybe 2 or 3 soft quarters, but the underlying business is solid. And once the dust settles down as far as all these loan waivers are concerned, again, I think the company will bounce back very well. Valuations are extremely attractive.
Credit Access Gramin, similar story.
Same story. I think all microfinance companies have been under cloud because of the election season. So what happens is that political parties promise loan waivers. They managed to get some loan waivers from some of the cooperative banks or the state-owned financial institutions, but that impacts the collection efficiency of the microfinance companies. That impacts.
Why?
Imagine you have a loan which is there from a cooperative bank, and you have a loan from Ujjivan Finance. If you get a loan waiver from the cooperative bank, you will naturally expect that your loan from a private sector microfinance company may also get waived, but that's not going to happen. So you wait and wait and wait and see that whether you can avoid paying the installment. And then when actually the waiver doesn't happen, what you have is that you defaulted on a few installments. And immediately that gets tracked in the balance sheet numbers, in the collection efficiency, the NPA numbers for the microfinance companies. And then we people in the stock market, for us, we are looking at that figure with a microscope. If that starts to worsen, it's a big red flag for us. And then you want to try and get underweight over there. And typically traders want to then exit those stocks.
Gotcha.
But from a long-term investment, it's going to come back.
Gotcha. Okay, let's go to the third one, Landmark Cars. So this is the last underperformer. Why? What's going wrong with Landmark Cars?
See, I thought that it was a great business trying to sell Mercedes in India. I couldn't buy Mercedes India because it's a private company owned 100% by Mercedes-Benz Germany. So the next best thing to buy is to buy a dealer, India's largest dealer for Mercedes cars. But somehow their financial performance has been extremely disappointing. A lot of the other agencies which are non-Mercedes cars, they have not done well at all for them. They are saddled with inventory and saddled with high working capital over there. And in the core Mercedes dealerships also, I think the growth rates have been disappointing. So that's the reason. And we'll review these investments from time to time. If we feel that there is something which has not worked out, then I'm sure that, a few months from now, we'll start reviewing these stocks and giving additional advice on these Paisamaker stock which you recommended earlier. Look, we can't get everything right.
No, of course.
There are a few mistakes. And in the course of the next year, we will own up those mistakes.
Right. So I'm asking at this point, because it's been 6 months of the Paisamaker series, Landmark Cars. Is this still a Paisamaker or not?
Well, it's treading a soft path over here. Maybe one more quarter, we'll be patient with it. If this quarter doesn't work out well, June quarter, September quarter, then we'll throw in the towel and we'll say that, look, it didn't work out up to our expectations and one needs to move on from the stock.
Okay. So keep your eyes peeled. If the quarter numbers are not good, we'll put out a video and we'll delete Landmark Cars from our Paisamaker list. Right. Let's talk about the outperformers now. Tech Wabag. It's doubled almost since you recommended. What's all right?
Oh, wow. It's doubled. I didn't know that also. But look, it feels nice to have got that story right. And it's all to do with environment and water. It's this water shortage, better utilization of water is so important. And if you want to play that investment theme, then there are very few companies, and Tech Wabag is one of them. They are one of the largest desalination plant technology providers. They've done India's largest desalination plant back in Chennai, and that's been very, very successful. And I think that India needs several dozens of desalination plants because we have a long coastline and huge shortage of water. Also, I think globally demand for water projects, good quality water management has improved. So they have good export projects, export prospects as well. So very positive on the company. Bit disappointed that they have not declared numbers, which I think is their true potential. But I think that this company can certainly go places.
All right. Second outperformer, 361 WAM. That's also done really, really well. Up 55% since you recommended it. What's gone right there?
It was one of our earliest Paisamaker stocks. And I really like this wealth management space because India is having a phenomenal wealth creation journey. And there are so many millionaires and billionaires being created. And there's a great deal of awareness about having professional help to manage your money. And 360 is one of the largest wealth managers in India. They run a super platform, very aggressive in terms of marketing, and it's a great operating leverage business. So you keep on adding more and more AUM, add more management fee, and because your costs don't go up in the same proportion, stock tends to do well. And look, stocks have been booming, markets have been booming, so they automatically their AUMs have gone up as well. So, and their income is linked to that. Also, sensibly, the management have been focusing on steady income, not which is the one-time nature or transactional. So they want steady flow of income, which has worked very well for them.
Right. And let's go to our last outperformer, Time Technoplast. That's also up nearly 50% since you recommended it. What's gone right here?
I think that it was an under-discovered stock and not well covered by analysts as well. But this company has got some phenomenal products. The one which I like the best is composite cylinders. And these are composite cylinders, are LPG cylinders. And they're really extremely safe to use. In India, fire emanating from a LPG cylinder is very common. But if you have a composite cylinder, then the chances of fire are much less. There's a huge export market for these composite cylinders as well. So that's one product which has done very well for them, as also some of the other products which are highly value-added products. And it's another very well-managed company, and they've got a lot of competitive strengths. And when we recommend the stock, the valuation was very attractive.
So, quick one. We did a bit of analysis on all the Paisamaker stocks. And I think our viewers can see it on screen right now. We've got a lot of exposure to, I guess, consumer goods, financial services, software, pharma. And those are the sectors that are most represented in our recommendations. And the sectors that are really not represented in our recommendations are capital goods, defense. Those two have been, I guess, big thematic misses, but maybe infra, commodities, power, PSUs, all of these, especially in recent months, have done particularly well. So I wanted to just take a second and ask you about this, because we seem to have chosen a particular space, some space that we've lacked. So what's the reason?
So a lot of these stocks are for the long term. I keep reiterating, you need to be invested for 3 years at least. And defense, infrastructure, commodities, they have been the flavor of the season, but they're extremely expensive as well. So I have to be very conscious of the valuations. I have to be have responsibility towards the viewer that we are recommending stocks or advising or discussing Paisamaker stock which are reasonably valued. Because it's very easy to go with the flow and buy a stock which has run up 3 times, 4 times, 5 times. But usually I've noticed that 3-4 years down the line, those returns are very, very weaker. So we have to avoid what's the flavor of the season. We have to avoid stocks which have run up significantly, but look for stocks where there's still some potential. I mean, the legendary Vijay Kedia once said that when you're going from VT station all the way to up north to Virar, you want to get onto the train at 2-3 stations once the train has started moving, and not in the middle of the journey or when it's towards the end of the journey. So I feel that timing also is important, and these stocks like PSU stocks, defense stocks, had been recommended or started up Paisamaker series 2-3 years down the line earlier. These stocks also would have come on a recommendation list.
All right. Well, I guess that's all the questions I have for you today. I'm just going to flash up on the screen for our viewers the list of all the Paisamakers that we've recommended till date, along with any updates and views that we have on these Paisamakers. Now, I'll hand this list over to you as well. And just at this point, this is a moment to flag if there's any stock that is no longer a Paisamaker, you don't believe in it anymore, just as a checkpoint.
As I said, I think in the list I particularly see, I just feel that Landmark Cars has been a bit disappointing and it has underperformed its potential. As I said, give it a quarter, we may drop it. But a lot of these are businesses, as I'm reading the list, they still are very interesting. And they are still worth studying. They are still worth looking at investing in them. And apart from doing this exercise, more important exercise would be to see how their quarterly numbers have moved. If you've seen quarterly earnings per share grow in a solid double-digit high teens, I think we are pretty much fine.
So, just for some context, I think we're at the end of Q1. Q1 results have already started coming out. And please do check us out across all our social media channels. Because what's going to happen is, as our Paisamaker stocks, as their results come out, we're going to try and either do, a reel or a short on YouTube, or we're going to try and do like a, post on Instagram or something of that nature, just to keep you guys, our viewers, up to date on what our Paisamaker stocks are, because at least the hope is that a large proportion of our viewers have taken some money and invested in some of these stocks. So,
Yeah, we should. I think it's a good idea to have a quick review once the quarterly results are out, and I think we should incorporate this in our channel.
so when do quarterly results end?
14th August
14th August
for June quarter.
for June quarter. So then hopefully by 21st August or so, we should try and do like a brief Paisamaker results review. So keep your eyes peeled for that, and we'll be back with more stuff soon. Thank you so much for taking the time to watch this podcast, and we'll see you soon in the next one. This podcast is produced by Elixir Equities Private Limited, a SEBI registered research analyst. Registration number INA 00004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.